RealAgriculture.com's coverage of the 2011 National Cattlemen's Beef Association meeting is brought to you by Haney Farms and Elanco Animal Health. Okay, we're at NCBA 2011. We're with Brian from Canfax. Brian, you've been at Canfax for probably 9 months?
Yeah, 10 months, yeah.
Okay, so what's Canfax up to right now?
Well, we're, Canfax is it's got a dual role a little bit in terms of how we operate. Our number one thing is we're collecting and managing and monitoring market information for the Canadian cattle industry, and through that we rely on a voluntary data collection with feedlots and producers out there who voluntarily give us information. So, we're making sure we're serving and providing enough value back to the members and people that are providing us information as in market information and analysis and such. So
it's a voluntary process for everybody to put data in, but the whole industry gets the data out.
Exactly, yeah. It's a fairly public, most of the information we do is available publicly. We do some things just for members only, just to try and increase the value of it.
Right. So cattle prices are very good right now, just relatively speaking. We've obviously had a shrinking cow herd for quite a period of time here. Mm-hmm. Is this the year we turn the corner?
Well, that's the golden question for sure this year. We're even sort of surprised by this continued strength in the markets and producers' optimism, how quickly it turns around and after all we've been through. So, whether we'll really turn the corner, but we're definitely going to slow down this reduction without a doubt.
We've at least, people have to at least be thinking about holding more back. Whereas before it was like, no question, not thinking, I'm killing more, I'm getting rid of these animals.
Absolutely. And the sort of the surprising or interesting part is, we've talked about, or you hear a lot about the demographics and issues and people wanting to get out of the industry yet. Sure, there's people that want to get out, but if you look at bred markets and stuff like that, those cows are not going into the slaughter plants anymore. So they're going to other people buying in. So it's given an option for these guys to get out and other guys to expand and maintain, this herd size.
We could probably expect a pretty strong bred cow market.
Oh yeah, it's already picked up. Part of the thing that's gone on this year that maybe we didn't fully factor in last fall is just the amount of cheap forage around. The guys got feed. Yeah. Calves are worth a lot, so they'll sell the calves and feed cows, and that's supporting the prices definitely.
So you're expecting kind of we'll hold at last year's number?
Could be, yeah. The big question is this heifer market, right? We always got cull cows coming out. How many heifers are we going to retain? And there's going to be some retention, but you got other guys that are looking at the value of these heifers right now, and they're after everything they've been through. It's kind of nice they can take some money and stick it in their pocket.
Well, that's one of the issues is that we've had quite a number of years here where the cow calf is not done very well financially, and so it's kind of now that we're into some money, it's like do I try to replace some of that cash and build it back my financial statement.
Exactly. Yeah, it's sort of hard to predict human behavior and stuff on how they're exactly going to approach that. Depends at what level of optimism the guys are going to be, because now you're stepping into a $800-900 open replacement heifer here. So and then you got to wait another year for a calf, or do you just take that $800 or $900? Maybe we'll see next year. So that's the hard part to predict, and that's going to drive a big part of the growth coming up, because we know there's going to be strong cull cow prices this year, definitely really strong again, and that always draws a few more cows to the slaughter plants. So we'll need the heifers thing to turn the corner.
What are cold cows worth right now?
Well, we're above the pre-BSE average. We're mid-60s probably average here in Alberta. So and potentially stronger come spring.
So what's driving that market? Just tight supply? Tight supply
and demand. They kind of got the perfect storm right now. Tight supplies, in North America. We're not importing nearly as much of that manufacturing beef. Lots of people interested in that hamburgers. We're even seeing, a lot of consumers moving down from the high-end cuts to consuming hamburgers, and we're seeing the retail or food service people moving up, actually, sort of the midstream restaurants offering hamburgers that traditionally didn't, just to hit that consumer market. So supply and demand really working in the cull cow market favor.
So what, from a Canfax perspective, what are you looking at for 2011 for the fat market? We see quite a lot of strength there. Again, the tight supplies are definitely helping that, and it looks like we're going to get continued strong export markets. So the theme of the conference seems to be, when you talk to people, is where the cattle going to come from.
Yeah, exactly. That's, you've got a lot of capacity in the feedlot sector and the slaughtering plants. In the U.S., it's really interesting because the northern states have relied heavily on Canadian feeder cattle, and there's just a trickle going across the border. So for the U.S. side, and then as they go south, they are pulling calves out of Mexico to keep that going, because they're going to have a record, the smallest calf crop in 50 or 60 years this year.
And this fat cattle turn has been, obviously, for the unlocked cattle, been very profitable.
Yeah.
The replacement costs are so high. It's really difficult right now to sort of figure out what you should be doing.
Yeah. Like the futures markets are really lofty right now. There's a lot of carry in the market. So, is that going to back up supplies or push them back a little bit? But it's all going to depend, and we got to test this. We've gotten a lot of this market recovery in the cattle sector in light of really, lackluster North American demand. Like loins and stuff like that are not that great. Ribs, it's the export markets that are driving that.
It's not North American demand that's going crazy. It's global demand.
Yeah, and global supplies. It's not just North American herds. You look at just about all of the herds in the world in the last few years have shrunk. This higher coarse grain markets have hit the profitability of cow-calf producers or the beefs, all meat sectors really.
Right. So with the par dollar and Canada being big into exports, where does that leave us?
Well, again, that's the interesting. We talk about a par dollar, the high Canadian dollar, but there's a big story around it's a weak U.S. dollar, really. That's fueling the United States exports, and we're actually benefiting from that. Especially the last 2 or 3 cents as we've crossed par. As our dollars strengthened versus the U.S. dollar, but their dollars weakened, and that's fueled the commodity market. So I think that's all been our stronger dollar, our above par dollar, has been offset by the commodity run that's kind of happening with the weak U.S. dollars.
So is 2011 maybe going to be the story of the cow-calf producer?
Yeah, exactly. Actually, this fall of 2010, and the guys who retained some calves, and since BSE, more guys maybe started backgrounding, and it's really paid off, and it's going back to the cow-calf producer, and that's what we need. They control the size of the cow herd, and if they're not getting paid appropriately, they're not going to keep cows, right? And so it's all how they're going to react to that, these price signals, and their financial position as to whether they expand or just take some money in.
Well, more and more, when we talk about being bullish, people are bullish prices. They're not necessarily bullish feed yard margins.
Oh yeah, that's a big concern actually, and it gets lost a lot. And we get, people always talking to us, big prices, everybody's happy. I'm like, well, the input costs are going up, but the tight supplies, there's not enough calves out there to fill all of the pens. So these feedlots are competing so hard for these calves. It's not leaving them. Their margins are not going to be. It's going to be a really tough year given the amount of money they got to pay for calves. A lot of risk for tight margins.
So when you look at the global landscape, you said the global demand's been the story. Do we expect that demand to continue to rise, or?
It looks promising. Yeah, we're still building and growing from the post BSE struggles we've had here. So with South Korea, we've been in and out of that for a couple of years now, and finally last year things opened up. We got smooth sailing, and that was a huge market and a huge driver to prices. This year we're looking at China's next, right, as our potential new market. So it's not even just growing the growth within our markets. It's getting more markets, and that's given us some good potential.
So where do you see Canfax going with its information and its data? Like obviously you do put out a Canfax report, and there's a number of different packages that you provide.
Yeah.
Where do you see that? Just the different information is going to be different, or is the way the data is collected, or?
Well, a little bit of both. One of the things is, and we're really, I think one of the things Canfax needs a little bit is to open some more doors and get a broader coverage of the industry. It's maybe shrunk down a little bit, as they're saying. So it's really important we get as much information from as many players out there as possible. Like say, there's more captive supply, so the cash trade, especially right now, it's a very small number of hands that are actually selling cash cattle. So it's critical we get as many of the cash cattle traded out there, and it's just as simple, they can phone it in or email us or whatever to make sure we're maintaining the best database possible for the Canadian beef industry.
Cool. Okay, Brian, thanks a lot.
Thanks.